Today was another impressive day for stocks. We're almost back all the way up to the upper gap. Then the fear and greed index today sitting at 41. Are we about to shift into neutral or even greedy territory? Then we have not seen this indicator so bad going all the way back to 2020 during the lockdowns. Now, if we come over and look at the volatility index, the VIX was down 17 cents on the session, down another 1.15%. And when we look at this, we're getting very close back down towards these lower levels where we first seen that volatility spike on the way back up. We look at the dollar index, it continues to cascade lower. And as the dollar goes lower, we would normally expect gold to be rocketing to the moon. But today, gold actually closed with a hammer candle, which makes this a possible hanging man type of candle. Now, is this going to be a reversal pattern or not? You guys let me know what your thoughts in the comment section down below. One thing to note though, however, with a hanging man reversal pattern, just keep in mind, it's one of the weakest of all reversal patterns out there. And we come over and look at crude oil. Crude oil had another down day out here as well. Then we jump over and look at Tesla. Tesla is basically at a very good rejection off the 78.6 level, making its way back up towards this potential minus development area. But let's talk about some things real quick. We come over and look at the small caps. The small caps trying to come over here and fill the first gap, not there just yet. And the MACD indicator is about to cross, but it's not crossed to the upside yet. Then we look at the diamonds and look, the diamonds are almost near the top of the candle where we actually had that started that big rejection on the way back down. And if we look at the diamonds, this has been a very healthy move on the way up. There has been no retracements allowed. And if we measure from the low to the high, the Dow's retraced 6.28% of that move down. But then we look right here, stock market's fragile bounce at stake as Powell prepares Jackson Hole's speech. Then we come over and look at this real quick. Here's how US stocks historically performed around the Fed's Jackson Hole gathering. Now, when we look at this, this shows us the 5 days prior to the Jackson Hole speech. This shows us the S&P return 5 days after the speech, and then we can see the combination of the two. But one thing that they took out when you look down here at the averages, right? The average 5 day after the Jackson Hole speech, they say is 0.7. Now, if we look at this, if you guys remember, we had that Jackson Hole speech in 2022, and the markets absolutely came unglued when Jay Powell basically came out and said, we're going to do whatever we can to get inflation under control. Well, we're still talking about it 2 years later. So I don't think the Fed has done such a great job at this moment. And we're going to see, all right, this week, so far, the 5 days going up into it, we are actually having another bullish time. And one thing that you'll notice is most of the time, if we're bullish going into the Jackson Hole speech, after the Jackson Hole speech, we're normally up as well, which could be exactly what the market needs to see to go ahead and push up towards all-time highs in this market. However, we look at this article real quick. U.S. leading economic indicator plunges for 29th month, worse than during the lockdowns. And as we look at this, we can see this line right here, right? This is showing us, right here. Here's where the pandemic was. Now, this is the worst going all the way back to 2016. Is there problems brewing ahead? We all know, yes, there's going to be a recession regardless about what the big banks keep talking about. Then with a little bit of good news today, Blinken says Israel agrees to a US-backed proposal for a ceasefire, calls on Hamas to do the same. Now, will this be enough to stop Iran from going on the offensive? If so, maybe, just maybe, the stock market may be spared. Now, let's not forget, we have earnings after the bell. Palo Alto has earnings coming out, and we can see after hours, Palo Alto is rocketing on the way up. I suspect their earnings have just been out. I did not get a chance to see their earnings release. So with Palo Alto going up, is it going to be enough to push it all the way up here towards filling the gap? We talked about this a little bit in this morning's video. Then as we come over and look at the QQQs, notice the Qs are right between the 61 and 78.6 Fibonacci level. And this has been very impressive. This is now 1, 2, 3, 4, 5, 6, 7. This is the 8th consecutive up day in a row. We have not had a pullback. I want to make everybody aware, Apex 7 is 71% sale off all their valuation accounts, passed in as little as 1 day, 50% off reset fees. And if you're a trader that likes to trade the larger accounts like the 150K account, the 250K account, and the 300K accounts, the activation fee for those accounts are only $40. Now, if you want to take advantage of this offer, use the link in the description box down below and use promo code Mike at checkout. Now, with Jackson Hole coming up, are we about to see a pullback in this market? We look over here at the 4-hour chart. MACD indicator still is showing no signs of weakness. On the 1-hour chart, we do have divergence as the market is pushing up higher. the MACD indicator is failing to confirm those new highs. Then as we dive down and look at the 30-minute chart, notice we still have a lot of gaps below us, but then today, just a little bit of a rocket ship on the way up. And essentially, once we got above value area high from the prior day, notice what we did. We basically stayed above it and we just kept grinding on up. Now we do have huge MACD divergence at play at this moment. Notice this was a setup for today, all right? We basically overthrew the overnight value area low. We came back up. From that point on, it was a rocket ship on the way up. From that point on, we only had one down candle all day. All you had to do was buy, hold on, and sell sometime later than when you bought, and everything would have been just fine. One thing to note, we have value area high coming at 19,688.50. Look where price is now. It is miles and miles above that price point. That either tomorrow or the following day, we are highly probable going to come back down and test that level. The question is, are we going to continue to go higher first? We look at the point of control that comes in at 19,609.00, and value area low will come in at 19,545.50. Now, if you're more of a conservative type of trader, then you might want to go ahead with the thesis that as long as we're above value area high, I want to look for higher prices. But with this straight up move right here, I'm a little bit suspect. Now, so areas I want to focus on the way back down is this high volume area right down here, about 19,781.75. If you guys join me tonight during the live stream, you'll probably see me trying to target this level tonight. If you want to make sure you don't miss tonight's live stream, make sure you're subscribed and you have the bell notifications turned on for all. Now, as we come over and look at the SPY, notice we're almost right back into the gap that we had right off of all-time highs. We are not that far away from making another new all-time high. Now, we do have some gaps below us that could be a little bit problematic, and we'll see if and when we start to come back down towards those levels. Now, we have had 8 consecutive up days in a row, and I am still watching this area about 544.66. MACD indicator on the daily chart has firmed up. On the 4-hour chart, no signs of weakening of the MACD indicator. Out here on the 1-hour chart, though, now you can see we're starting to set up divergence. Price continues to grind up higher. The MACD indicator just simply is not confirming those new highs. Then out here on the 30-minute chart, we can see the MACD divergence even more so. Now today, notice what we did, all right? We opened up, we're above value area high. We dipped down, we hit the point of control. Then look, we did not make it to the minus development area, nor the value area low that we talked about. So as soon as we started coming back up above value area high, from that point on, you knew you should have been on the buy side of the trade. And we discussed that in this morning's video. Now, as we come over and look at the S&P 500, notice we were able to take out one of the untested point of controls up here, 5610.75. Now the question is, are we about to make it to 5648.50, or are we going to start coming down trying to test some of these high volume spikes that we have out here on the composite profile? As we dive down and we look at the overnight volume profile levels from this morning, similar to the NASDAQ, right? We had value area low right down here. We overshot it as soon as we started coming back up. You could have played the rotation on the way up and then held for some of those bigger targets off the higher time frames. Come over and look at the 30-minute chart. Notice we are also at this moment appearing that we may close above value area high, which comes in at 5620.25. The point of control comes in at 5601.25. Value area low will come in at 5583.75. So tomorrow or the following day, I do expect this level to be taken out. Then we have a lot of high volume areas on today's profile that we can use for additional targets. One thing to note, anywhere where you see these minus development areas within the profile could be areas where the market wants to do a U-turn, flip, and get bullish out of that area. So you want to pay very close attention to those levels. If you start seeing rejections in the markets off the higher time frames in and around these minus development areas on the profile, be on the lookout. The market could be getting ready to run to the upside. Now, if we scroll this chart out here just a bit, yes, I still think at some point we are going to hit this minus development area. Then we look to see, okay, where do we have any point of controls below us? We have one at 54.67, and then we have some way on down here, which I'm not really concerned with the ones much lower. One thing I also want to do is from the swing point right over here, I do want to grab a Fibonacci retracement and measure the entire leg. So a 50% retracement would bring us to about 54.07. Keep in mind though, if we continue to go higher tonight, we would have to adjust the Fibonacci retracement level to meet wherever the highest price is out here in the market. Now, if you guys want to learn how to avoid your stops from being hunted, watch this video right here.